Why trend trading will never make you rich. Let's get straight to the point. Trend trading will never make you rich. I know it is a bold claim. You have probably heard the endless sermons from trading gurus telling you that the trend is your friend. They make it sound like all you have to do is identify a trend, jump in and let the market do the magic. Sounds easy, doesn't it? Well, let me burst that bubble for you because the reality is far more complex. The truth is, trend trading is one of the most misunderstood and misapplied strategies in the Forex market. Yes, trends exist and yes, they can be profitable. But here's the kicker. They don't exist in the simplistic, straight line, fair tale way they are often presented. Markets are messy, trends are inconsistent to say, and the harsh reality is that trend trading alone is rare enough to build significant wealth. Let's start with the most obvious problem, identifying a trend. Ask 10 traders to define a trend and you'll get 10 different answers. Is it higher highs or higher lows? Is it the price bouncing off a moving average? Or is it some combination of indicators aligning perfectly? The lack of a clear, universal definition means that what looks like a trend to one trader might look like noise to another one. And by the time you think you have spotted a trend, it's often too late even. Think about it. How many times have you jumped into what you thought was the start of a trend, only to watch the market reverse the moment you entered? That's because trends aren't smooth highways. They are more like rugged mountain trails full of false starts, pullbacks and traps. And let's not forget that traders are only obvious in hindsight. When you are in the heat of the moment, with candles flashing on your screen, every move feels uncertain. Now, let's tackle the next issue. Timing your entries and exits. Trend trading relies heavily on catching the meat of the move, the part where the market surges in your favor. But here's the problem. The best part of the trend is often over the time you have confirmed it's real. If you enter too early, you risk being caught in a fake out. If you enter too late, you are left chasing scalps, or scraps to say. And when it comes to exiting, things get even trickier. Do you hold on for maximum profits, risking a reversal? Or do you take partial profits and potentially miss out on the bigger move? This brings us to the elephant in the room, risk to reward ratios. Trend trading often requires wide stop losses to accommodate pullbacks and volatility. While this might protect you from getting stopped out prematurely, it also means that your losses can be massive when things go wrong. And let's be real, things will go wrong. Markets don't care about your trend lines, your moving averages, or your Fibonacci levels. They move in ways that defy logic, driven by news, sentiment, and randomness. Now, I know what some of you are thinking, but successful traders make money from trends all the time. And you are right, to an extent though. But here's the catch. Those traders aren't relying on trends alone. They're using advanced tools, robust risk management, and years of experience to filter out the noise and identify high probability setups. They're not blindly following a trend. They're analyzing the market from multiple angles to stack the odds in their favor. And that brings us to the core issue. Trend trading oversimplifies the market. It is often marketed as a beginner-friendly strategy because it sounds straightforward. Follow the trend, they say, and you'll make money. But this oversimplification lures traders into a false sense of security. It makes you believe that the market is predictable, when in reality, it's anything but. Let's talk about the psychological toll it takes. You see, the real trap of trend trading isn't just the financial losses. It is the mental strain. Watching the market whipsaw while you hold on to your position because the trend is still intact is a surefire way to question your sanity. And when the market finally reverses and wipes out your gains, or worse, hits your stop loss, you are left wondering why you trusted the trend even in the first place. Here's the harsh reality. Trends are a small part of the market. Most of the time, markets are ranging, consolidating, or moving unpredictably. If you are solely relying on trends, you are sitting on your hands during range-bound markets, missing out on countless opportunities. The real winners in Forex are those who adapt their strategies to suit different market conditions. So, what's the alternative? Instead of chasing trends, focus on mastering price action, market structure, and smart money concepts to say. Learn to read the story of the market. The story of the market is telling you what is the market telling you in real time, rather than focusing your narrative onto it. Develop a strategy that works across trends, ranges, and everything in between. And most importantly, focus on consistency, not just big wins. At the end of that day, the market doesn't care about your trend following strategy. It rewards those who are disciplined, adaptable, and willing to do the hard work. So, the next time someone tells you that trend trading is the ultimate path to riches, remember this. The trend might be your friend, but it is not your savior. If you have made it this far, I want to hear from you. Have you been caught in the trend trading trap, or do you swear by it? Drop your thoughts in the comments below. And don't forget to like this video. Subscribe for more myth-busting insights. And until next time, stay smart, stay adaptable, and as always, trade with purpose.